If you want to get funded and make those tens of thousands of dollar payouts on your prop firm account, you need to backtest, you need to practice, and you need to follow a fixed system with a set of rules that you can trust. You need to collect data on those rules, backtest sessions, collect your win rates, collect your risk to reward, collect your percentage returns over a backtesting session and that period that you backtest, and treat those backtesting sessions like you would in real trading criteria and a real trading situation. In today's video, using FX Replay live trading tool, I'm going to attempt to pass a $100,000 challenge in front of you guys to show you my system of rules that you can practice, that you can apply on your own charts and become a consistent and profitable funded trader. Hey guys, what's going on? Hopefully you've been smashing it this week so far. If you have not, don't worry, I'm here to help you out. My name is Jay, the owner of Funded, a community that has created hundreds of funded traders this year in 2023 alone, and helping traders become their own independent, profitable and consistent traders that can mark up their own charts, formulate their own trades, manage risk correctly, and understand exactly what price is doing and why price does what it does. On FX Replay over here, I've opened up a $100,000 account. I'm going to treat this session as a phase 1 evaluation with my Forex funds, which is a 8% total return, my max drawdown being 5%, and my overall drawdown being 10% on the account. So I'm going to replay the charts with FX Replay, which is a much more real life criteria simulation of the charts. It's much better than tradingview.com's replay tool, because on FX Replay you can actually place orders on the replay of the chart, manage your risk, and backtest sessions in the correct manner. So first and foremost in my session and in every morning when I wake up, and the first thing I do and look at the charts is hop over to the daily time frame and have a look at what the higher time frame intentions are. So first and foremost, I will look for the most recent daily break of structure that was created by the most recent low. So over here, I'm just going to go and label this for you as my D boss, which stands for daily break of structure. Because this high was broken by this low, therefore this high is weak and this low is strong and is now protected. So I'm going to go and label this low as my daily strong low. Just going to use the terminology of D strong, which stands for daily strong. And after price had that pullback with that internal shift and break of structure to the downside, we can then go and label this as our daily weak high. Within regards to order flow and structure, price's expectation is to always target those weak highs or weak lows. So this is our daily weak. And now we have our most recent daily range. So expectational order flow for the moment would be, is price has just had that break of structure. What does price do after every break of structure? Is price will incur some kind of pullback into the previous swing structural range, which price is busy doing. If I go and mark out the 50% of this entire range, I'm just going to use the fib tool. You can see over here at the 0.5 is the 50%. So this would be discounted areas of pricing. This would be premium areas of pricing. Price is now mitigated, discounted pricing areas of the previous swing range or the current swing range, which means that we can expect that shift to turn bullish and to now continue targeting those weak highs. So that would be currently the expectational order flow on XAUSD as of the 3rd of July 2023. Secondly, I hop over to the 4-hour time frame to have a look at what price is doing inside of the daily range. And this is super important, and this is something that many traders forget about. They don't look at the higher time frame intentions, because the higher time frame is the foundation and the core of what you do on the lower time frame. So it's super crucial that you look at these time frames and understand what they're doing. So if I have a look at the 4-hour time frame, you'll see over here, most recently, we've had this break of structure to the downside, which was created by the strong high. Why is that? Because price had a break of structure to the downside over here, created by this high point. All right, after that break of structure, this was a body closure. Price had that pullback and then continued to target to the next week low. And if you had to mark out the previous swing range, which was this high and this low, you look for the highest point in this range that created the break of structure, which was this point over here. That is why that is our valid current 4-hour strong high. So this we can go and label as our 4-hour strong. This being our most recent 4-hour break of structure. So that's our 4-hour boss. And then price has now had that pullback with a slight fractal break of structure to the upside. So this we can then successfully go and label as our 4-hour week low. So right now, 4-hour expectation is for price to go and target these 4-hour week lows. So price has had that break of structure. We're now in that pullback phase. We can expect to mitigate discounted areas of the previous 4-hour swing range, then target this 4-hour week low. But if we have a look at the daily time frame, we are currently in discounted areas of the daily swing range. So what can we expect is for price to take out that 4-hour strong high, because the higher the time frame, the more strength price has, the more money price is put into the markets, the more orders need to be collected on a higher time frame, because that's where the most money was pumped into the markets. We can expect sooner or later for a 4-hour strong high to be broken to the upside, which then signals we've now had that daily internal shift to the upside. Price is now ready to go and target the daily week highs. So yes, expectation would be to target the 4-hour week lows, but we need to keep in mind that price overall wants to target the daily week high. Therefore, we can expect that 4-hour shift to the upside. So as the 15-minute time frame stands, we apply the exact same rule. We mark out our 15-minute swing structure. So if we have a look, most recently, we've had this 15-minute break of structure to the upside. So this would be our 15-minute boss. So we can just label this as our M15 boss, which is now protected by this M15 strong low, which then we've now had this highest point over here to cater for that pullback. So this then becomes our M15 strong high, weak high, M15 weak. So now we have our M15 weak range. Most recently, we've had that M15 break of structure to the upside. We've now had that pullback. If I mark out the 50% of this current range, you'll see we've just wicked into discounted areas and pricing areas of the swing range. We then had that shift to the upside, where is the indication that price is now ready to go and target the M15 week highs. So let's go and have a look for supply or demand levels that created the shift to the upside. So over here we had, fractal break of structure to the downside created by this low. That's a weak low created by this high, because this was the most recent high that created that fractal break of structure to the downside, which expectational order flow was for price to take out that weak low. But instead, price had that shift to the upside, that pullback into areas of demand, which then had that big bullish shift to the upside. So this then becomes, over here, we can mark out this is our extreme demand zone, because this was the most recent candle with the inefficient push that created that break of structure to the upside. There is some inducement and liquidity lying above it, and it is currently unmitigated. So that is our 4 matching criteria in order for a supply and demand zone to be valid. So again, just to recap that, if you want to write that down, in order for a supply and demand zone to be a valid institutional level, it needs to create the break of structure, it needs to create an inefficient push, it needs to have inducement or liquidity above or below it, and it needs to be unmitigated. So right now, my current plan for this trade plan for XAU-USD would be for price to continue having this bit of a pullback, because we've now shifted bearish. Price is still not targeted the M15 week high. Instead, it's just reacting in the interim of supply zones over here. So let's continue price and see what we get. So I'm just going to speed it up. So I'm just going to speed it up slightly here until we get to our area of interest. We can actually mark out these double bottoms over here as liquidity. We can expect that to be swept, to be mitigated into the zone. So this is actually a really high confluence zone. So in this case, because our structure is in line, this demand zone has the perfect liquidity scenario with an inefficient push. I will place a limit order on this zone, not risking much because it is a risk entry. So in this case, entry will be at 1921.81. So that's 1921.81. Stop loss will put below this wick over here just to cater for any sweeps. So this will be 1920.40. What I usually do is when I risk entry, I don't usually put my stop loss directly below the zone. I will give it maybe 2 to 3 pips spacing to cover for spread. Sometimes price will slightly just wick past the zone, creating a sweep zone, which will still keep us in the trade. So in that case, I'm going to put my stop below this wick over here at 1920.36. So 1920.36, and take profit will be at the 15-minute week high, 1930.94. 930.94. So this in this case is a 1 to 9, nearly a 1 to 10 risk to reward. So on this trade, I'm going to risk 1%, which would be $1,000. And that position size will be, I think, about 750, 720, 700. Yeah, so about 680. Yeah. 690. So the position size is 690. I think this is equivalent to a 6.9 lot size on MetaTrader 4, MetaTrader 5. I think the position sizing on FX Replay is completely different. But let's go and enter the position over here. This is a 1% risk of $1,000. So let's go and click on save. Okay, so our position is now ready. I'm going to let price do its thing over here. And let's see if we get tapped into our zone. Sharp push. Okay, we've been tapped into our zone. Nearly stopped out. That is still, if we're to cater spread, it's still about 0.5 pips. Spread is not that big, so we'd still consider we're in this trade. All right, let's continue. Okay. At the break of this high, I will set break even. Big push up. See, the reason why I also risk entered on this demand zone is because it had our perfect criteria, perfectly in line with structure. Therefore, we didn't really need to look for confirmation on this demand. So what I'm going to do is I just want to move. How do you move stop loss to break even? Or trail stop loss. Oh, there we go. Okay, I'm just going to put stop loss above break even. Let's continue price and see what we get. Okay, at the break of this high, I will move my stop loss above right there. Below this low, so we're now at least securing 1 to 3 risk to reward profits. And we'll just let this run. Oh, nearly stopped out at BE. Okay, there we go. We actually targeted that M15 week high. So yeah, that was on that 1 to 8, 1 to 6. That was a 1 to 6 risk to reward. We secured $6,000. We basically need $1,800 left to pass. All right, so let's continue price and see if we can get another entry. Remember, we can expect now, after that break of structure, for price to have a pullback into discounted areas of the swing strong. So over here, we've now had this break of structure to the downside. A very sharp break of structure. So we might not see price pull back all the way to extreme areas of supply. But we also have a most recent area of supply over here where price is currently now. So what I'm going to do is I'm going to mark out both these zones to ride the pullback. I'm going to hop over to a lower time frame on the 1 minute time frame over here. So if we had to refine this zone, we can see we have a 1 minute refined zone over here. So in this interim, what I'm going to do is, because expectational order flow is to ride some shorts to more discounted areas of this M15 swing strong before we continue to target these new M15 swing highs. All right, so let's continue price and see what we get. to see a little bit more liquidity build up for this zone before I would enter. Yeah, basically such as that. So over here now, we have slight inducements over here, more inducements over here. So these can be considered as double top liquidity because there's going to be a lot of people selling here. There is a level of support over here that people are looking to now sell from, especially with this bullish engulfing candle. So what can we expect? Is this liquidity to be swept out to mitigate our supply to continue targeting these weak lows? So in this case, I'm going to again go and place an order on the supply zone, 1924.31. With the stop loss, I'm going to put above the supply because it's quite a wide stop loss. This is actually also an equilibrium zone because you'll see over here, and this is something I teach in the private MM Funder Discord, is the wicks of the supply zone is bigger than the body. Therefore, we need to mark out the 50% in this case, which will be, all right, over here. So that's the, over here. So that's the equilibrium of the zone. So we can actually go and set that limit on the equilibrium at 1924.79. Stop loss just above the zone in this case because I'm going to risk less on this trade and I want as tight as risk to reward as possible. So this will be 1925.35, 1925.35, and our stop loss, we're just going to target this internal 15-minute low at 1919, basically 1919. So 1919. So again, this is looks like, again, this is a 1 to 6 risk to reward. On this trade, we want to go and risk half risk. So I'm only going to risk 0.28% on this trade simply because it isn't a pro trend trade. It's counter trend because we're riding that M15 pullback. So over here, we can go and set our sell limit. I don't know why that disappeared. 1924.79. 4.79. We can go and save that. Okay, yeah, there we go. Okay, so let's go and enter this, or let's see if we get tapped in. Okay, we've tapped in. If we take out this low, I will set break even. That's our most recent fractal low. And there's that change of character we also wanted, so we can now perhaps see price react to areas of supply over here. Okay, let me just pause there. We've now had that break of structure to the downside, so I'm going to move stop loss to break even. Price reacting off areas of supply and nearly stopped out at BE. Price having that change of character, that pullback into areas of supply over here. Okay, so we've now had that new structural shift to the downside. We've had this break of structure, so I'm still going to leave my stop loss above that high. And this should take out the weak low here as well. Because we are always on the right side of the market once we understand structure and order flow. And over here, we're close to TP. We've actually passed the account here already at $108,000 in 2 trades, in a 1 to 6 risk to reward, and now this being a 1 to 10 risk to reward, risking only 0.2%. So you can take a look at how price is forming a beautiful double bottom over here. So what can we expect? Is the sweep of this double bottom then to perhaps continue a bit bullish, or if it wants to continue bearish, catering for that overall pullback. Okay, and then we've now had that sweep of that double bottom, and we actually closed TP on this trade into trade. So over here, if we have a look at our results, we had an initial buy. We had an initial buy, which was a 1 to 10 risk to reward. We risked $690 for $6,200. Then we had a 1 to 5 risk to reward, risking $500 for $2,800. So once you understand the ideology of supply and demand zones, the criteria that make them institutional levels, and pairing that up with your higher time frame structure story, which allows you to execute so perfectly on the lower time frame because you are now understanding where price wants to go. So if I had to recap these two trades, all right, we had that break of structure to the upside over here, that pullback into a bit of a pullback, price then a slight pullback, all right? Price then went to go and target these weak highs, but couldn't target these weak highs. It then had another pullback in the interim, which was created by this extreme demand zone over here with the double bottom liquidity that went to go and sweep, violently mitigate the zone, and eventually went to go and target these weak highs. After that M15 break of structure to the upside, what can we expect is that overall M15 pullback to continue bearish for a bit, such as so, then have that internal shift to the upside to then continue targeting those M15 weak highs. So over here, we had a look for M15 supply zones that created that break of structure to the downside, that created that double top liquidity over here, which price then swept into that zone. Yes, we risk entered over here. It also gave opportunity for a chalk entry if you wanted confirmation, but in this case, we just took risk entry at the equilibrium of an equilibrium zone, and this supply zone is highly probable because it's an institutional supply. It created the break of structure. It has that inefficient push. It has that liquidity above it. It's in line with higher time frame structure. So that is why we're not looking for longs of demand levels over here that, yes, also created the break of structure, has that double bottom liquidity, but because it's not in line with structure, we've just had that M15 bar, so we can expect that more of a pullback to continue bearish for a bit. That's why it's so important to understand your higher time frame intentions, which will allow you to execute on the lower time frame. So this was a $100,000 phase one passed in actually just 2 trades. I don't always pass challenges this quick. There has been times where I've passed it in 1 trade. There have been times where I've taken 4 or 5 losses in a row. But one thing I want you to take note of is when I take losses, they are so tiny, they're not even significant to the wins. I'm managing risk correctly. I'm focusing on risk to reward. My losses are tiny compared to the wins. And once you nail that psychology, it becomes much easier on yourself to execute your trades, especially knowing that you're on the right side of the market. You're understanding your institutional levels, where price is going to pull back into, react from, and target those relative weak highs or weak lows. You will always be on the right side of the market. So I hope you guys got some value from this video. If you'd like me to continue this series, passing some challenges in a live trading scenario, that will be great. Comment down below, and I will make more future videos like this. If you guys want to get access to my full SMC and ICT mentorship, where I teach you how to mechanically mark up your structure, how to find these institutional levels with a mechanical rule-based system that you can follow every single morning when you wake up, how you can also live stream with me, how you can see my markups every single morning, and how you can see I apply what I teach in action on the charts. I will leave a link down below to that, all of that information. It's a private Discord server. We've created about 100 funded members in the past 5 months, and hopefully that will be you next. Without further ado, take care, and I'll see you in the next video.